This Swanson Reed presentation provides information regarding the changes to the R&D tax incentive applying from 1 July 2021 for the FY22 period, specifically in respect of the new clawback adjustment mechanisms. The law to enact these amendments was passed in October 2020 within Treasury Law's amendment, a tax plan for the COVID-19 Economic Recovery Bill 2020. Under the amendments commencing for FY22, there was no change to the definition of eligible R&D activities and R&D expenditure. The FY22 changes applied to determination of the R&D tax offset rates for R&D expenditure, processes for clawback of feedstock adjustments, recoupment amounts, or assessable balancing adjustments, and administrative processes to enhance integrity and transparency. The FY22 changes for clawback adjustment mechanisms were particularly complex, and this presentation will be dedicated to their application. The presentation references a recent ATO guidance document titled Clawback of the R&D Tax Offset, which was published on the ATO website in November 2022, as well as the ATO's R&D tax incentive schedule instructions published before July 2022. Clawback adjustment mechanisms have always existed within the R&D tax incentive programs in some form, and they are designed to reduce companies' permanent R&D tax benefit where their cost of conducting R&D activities is offset by clawback events, which may reimburse companies' incurred R&D expenditure. The rationale for these clawback adjustment mechanisms is to align companies' benefit from the R&D tax incentive with expenditure where the company bears the financial burden of conducting the R&D activity. The three types of clawback events provided for within the R&D tax incentive include, firstly, feedstock adjustments, which are triggered when a company generates sales from input costs for which they have claimed an R&D tax offset. Secondly, receipt of a grant or recoupment from an Australian government agency for expenditure where they have claimed an R&D tax offset. And the third and final clawback event is an assessable balancing adjustment for disposal of an asset upon which the tax depreciation is claimed as an R&D tax offset. Prior to the FY22 amendments, mechanisms for each type of clawback event were accounted for differently within a company's tax return. From FY22 onwards, a new uniform clawback mechanism applies whereby a total amount of assessable income from clawback adjustments is determined and reported at Part B, Item 6 of the new ATO R&D tax incentive schedule. The assessable income is then reported within the company's tax return. The amount of assessable income from clawback adjustments is designed to reduce the incentive or premium component of the R&D tax offset that relates to the company's clawback event, so that the company's permanent benefit from the R&D tax incentive excludes benefits for R&D expenditure amounts that the company is reimbursed for. The formula for calculating the assessable income under the new clawback amounts is within the newly enacted Section 355-450 of the 97 Tax Act, and is as follows: starting offset minus adjusted offset minus deduction amount divided by the R&D entity's corporate tax rate for the present year. In applying this formula, adjusted offset means the tax offset the R&D entity would have received for the year if the offset is reduced by the portion of the clawback amount attributable to that year. Deduction amount means the portion of the clawback amount that is attributable to the offset year multiplied by the R&D entity's corporate tax rate for that year. And starting offset means the amount of the tax offset the R&D entity has received under Section 355-100 of the 97 Tax Act for the offset year. Adjustments to the clawback amount may apply if this section or Section 355-475 of the 97 Tax Act had previously applied in relation to another clawback or catch-up amount. The ATO has changed their R&D tax incentive schedule for the FY22 period to take into account the clawback changes, and clawback adjustments are now disclosed at Part B of the new schedule. The ATO's new clawback guidance details a series of general steps to work out the clawback amount. However, before the total amount of assessable income from clawback of R&D tax offsets can be determined and disclosed, the different types of clawback events must be analysed separately. The ATO's new R&D tax incentive schedule instructions contain detailed information, which we will cover for each type of clawback adjustment. The first type of clawback adjustment relates to feedstock adjustments. A feedstock adjustment applies when a company obtains an R&D tax incentive offset for R&D feedstock input expenditure, where the expenditure has also produced tangible products for supply or commercial use. The feedstock adjustment applies to expenditure for input costs, which are defined as goods, materials, energy, or the decline in value of assets used to produce feedstock. For example, it may apply to the ingredient and energy inputs that go into making an experimental cake mix, which produces sellable output. Alternatively, it may apply to the material costs of a mechanical prototype, which is an experimental bespoke unit and ends up being sold by the R&D entity. A feedstock adjustment is triggered in the income year where the output is supplied or applied to a company's own use. The ATO's 2022 R&D tax incentive schedule instructions note that the disclosures to be taken up for a clawback event in relation to a feedstock adjustment are as follows on Part B of the new R&D tax incentive schedule. At Item 1, Feedstock Revenue, show the total amount of feedstock revenue from all R&D activities where those activities have produced products supplied to someone else or applied to the R&D entity's own use. At Item 2, Expenditure on feedstock inputs attributable to feedstock output, show the total amount of feedstock inputs attributable to feedstock outputs on all R&D activities producing products supplied to someone else or the entity's own use. At Item 3, Feedstock Adjustment Amount, show the total of all feedstock adjustments that are required to be made for all R&D activities. The ATO's 2022 R&D tax incentive schedule instructions provide the following information to calculate the clawback related to the feedstock adjustment amount. Step 1. Determine which R&D activities have produced marketable products. Step 2. For each of the marketable products identified at Step 1, work out the following amounts: the feedstock revenue for the current year and the sum of feedstock inputs defined as goods, materials, energy, or decline in value of assets used to produce feedstock inputs. Step 3. For each of the marketable products identified at Step 1, determine whether the feedstock revenue is less than the feedstock input expenditure. The feedstock adjustment amount for each marketable product will be the lesser of the amounts compared at Steps 2A and 2B. Step 4. Add together the amounts calculated at Step 3 above. This amount is then shown at B, Item 3, Feedstock Adjustment Amount. The following worked example of the new clawback adjustment for feedstock is available on the ATO website. Landscape Supplies trials an experimental granite crushing process to produce marketable granite sand, with the sand produced being sold for $9,000 in the FY22 year. Landscape Supplies has aggregate turnover in that year of $15 million, and the company's tax rate is 25%. The notional R&D deductions that the company can claim for its R&D activities are $22,000 in the FY22 year, and this includes $10,000 of feedstock expenditure. The company has no other clawback amounts. All the granite sand produced is sold during the same year, and the feedstock revenue is $9,000. This means that Landscape Supplies will calculate the amount to be included in assessable income for their feedstock adjustment using the following process. Firstly, Landscape Supplies compares feedstock revenue of $9,000 and feedstock expenditure of $10,000 and identifies that feedstock revenue of $9,000 is lower. The company then determines part of the clawback amount determined at step 1 above to be included in the assessable income by applying the following formula: starting offset minus adjusted offset minus adjusted deduction amount divided by their corporate tax rate for that year. The starting offset amount is calculated by multiplying the notional deductions by the refundable tax offset rate of 43.5%, which is calculated as follows: 22,000 multiplied by 43.5% equals 9,570. The adjusted offset is calculated by reducing the notional R&D deduction by the clawback amount and multiplying the result by the refundable tax offset rate of 43.5%, which is calculated as follows: 22,000 minus 9,000 equals 13,000. 13,000 then multiplied by the 43.5% tax offset rate equals 5,655. The deduction amount is calculated as the clawback amount multiplied by the company's tax rate for FY22, which is 9,000 multiplied by the company tax rate of 25% equals 2,250. The difference between the starting offset and adjusted offset reduced by the deduction amount is calculated as 9,570 minus 5,655 minus 2,250 equals 1,665. This is the incentive component of the R&D tax offset on the feedstock amount that is clawed back. The amount is divided by the company's tax rate to calculate the equivalent amount to include in assessable income. 1,665 divided by the company tax rate of 25% equals 6,660. Landscape supplies therefore includes 6,660 in its assessable income for the FY22 year. The next type of clawback adjustment we will cover is recoupment amounts. A clawback adjustment for R&D equipment applies where a company receives an Australian government recoupment or grant in relation to expenditure that is eligible for an R&D tax incentive offset. This may include a grant such as an accelerating commercialisation grant. However, a clawback adjustment for recoupment does not apply to federal government cash flow boosts, JobKeeper reimbursed salaries, which are already excluded under the at-risk rule, or recoupments received under the CRC program. The ATO's 2022 R&D tax incentive schedule instructions note that the disclosures to be taken up for a clawback event in relation to a recoupment amount are as follows on Part B of the new R&D schedule. At Item 4, recoupments entitled to show the total amount of recoupment received or entitled to received in the period that relates to notional R&D deductions for which the company has claimed an R&D tax offset. At Item 5, R&D expenditure related to recoupments show the total amount claimed as a notional deduction under the R&D tax incentive that relates to the recoupment shown at Item 4. Adjustments may apply if any recoupments have been repaid by the company. At Item 6, project expenditure for which recoupments were paid show the total project expenditure for all years of the project for which the recoupment has been paid, including both R&D and non-R&D amounts. Project expenditure means the amount to which the entire recoupment relates, and the terms of any underlying grant or recoupment may need to be analysed. At Item 7, R&D recoupment amount show the total of all R&D recoupment amounts related to the R&D expenditure which the company has claimed an R&D tax offset for. The ATO's 2022 R&D tax incentive schedule instructions provide the following information to calculate the clawback related to recoupment amounts. Step 1. Identify all recoupments that were received or entitled to be received in the period. Step 2. For each recoupment amount received or entitled to be received, subtract any repayments that were made by the company. Step 3. If a recoupment is of expenditure incurred, the recoupment amount is the expenditure recouped that is claimed as a notional deduction by the company under the R&D tax incentive schedule. Alternatively, if a recoupment relates to a project for which the company received or was entitled to receive a grant, the terms of which require the company to incur expenditure, the recoupment amount cannot exceed a formula based on the net recoupment multiplied by R&D expenditure as a proportion of the total project expenditure. Step 4. Add up all of the recoupment amounts worked out under steps 1 to 3. The following worked example of the new clawback adjustment for recoupment amounts is available on the ATO website. Burgundy, a company, conducts R&D activities in relation to a new machine that removes, shreds, crushes, and bales grapevines. The activities for which they receive the R&D tax incentive includes trials on a vineyard used to produce table wine. Burgundy also receives a reimbursement under a government vine pool scheme for certain costs they incurred to remove those vines. The company received $400,000 for expenditure which was notionally deducted under the R&D tax incentive. Burgundy's aggregated turnover for the FY22 year is below $20 million, and its total notional deductions for R&D expenditure for that year are $2 million. The company's tax rate is 25%. Burgundy is eligible for the 43.5% refundable tax offset for the FY22 year. The company has no other clawback amounts. Burgundy's starting offset is $2 million multiplied by 43.5%, resulting in $870,000. Burgundy's adjusted offset is determined by excluding the reimbursement amount that was notionally deducted and multiplying the result by its tax offset rate, which is $2 million minus $400,000 equals $1,600,000. $1,600,000 is then multiplied by the R&D tax offset rate of 43.5%, resulting in $696,000. The deduction amount is determined by multiplying the reimbursement amount that was notionally deducted by Burgundy's tax rate in the FY22 year, which is $400,000 multiplied by the 25% corporate tax rate, resulting in $100,000. For the expenditure that is reimbursed under the vine pool scheme, Burgundy includes the clawback amount of $296,000 in its reporting for the FY22 year. This is calculated as follows: $870,000 minus $696,000 minus $100,000 divided by 25% equals $296,000. The final type of clawback adjustment we will cover relates to assessable balancing adjustments on R&D assets. A clawback adjustment for an assessable balancing adjustment will arise if a balancing adjustment event, for example, a disposal of an asset, occurs to a tangible depreciating asset used in R&D activities for which a company has claimed the decline in value as R&D expenditure, and where the termination value of that asset is greater than the asset's adjustable value, which is usually its written down value. If the termination value of the asset was less than the asset's adjustable value, a deductible rather than assessable balancing adjustment may apply, and this is a separate calculation. The ATO's 2022 R&D tax incentive schedule instructions note that the disclosures to be taken up for a clawback event in relation to an assessable balancing adjustment on an R&D asset is as follows on Part B of the new R&D schedule. Step 1. For each asset used for R&D activities where you need to make an assessable balancing adjustment, work out the difference between the asset's termination value and its adjustable value. Step 2. For assets that were wholly used for R&D activities, the amount is the amount calculated in step 1 for that asset. Alternatively, where an asset was partially used for R&D activities, the amount is calculated as the amount calculated in step 1, but apportioned for the R&D use of that asset over its life. Step 3, add the total of the amounts calculated in step 2 for each asset and show this amount at item 8 of Part B on the new R&D tax incentive schedule. Once clawback adjustments for feedstock, recoupment amounts and assessable balancing adjustments are determined, the total clawback across all events must be aggregated to determine the total assessable income from clawback, which is then disclosed at item 9 of Part B on the new R&D schedule. Item 9 of the R&D schedule then feeds into item 7 of the company tax return to be disclosed within other assessable income in the tax return. The ATO's 2022 R&D tax incentive schedule instructions provide the following information to calculate the total clawback additional assessable income figure. Steps 1 to 3 apportion clawback amounts from all events comprising feedstock, recoupment and balancing adjustment amounts to relevant years in line with the years in which the underlying R&D expenditure was incurred. Step 4, add up clawback amounts for each year. For each year that the clawback amount is worked out under steps 1, 2 and 3, add up all the amounts attributable to each year. These are the total clawback adjustment amounts for each year. Step 5, work out the deduction amount. Work out the deduction amount for each year. This is the total clawback adjustment for the year as worked out at step 4 multiplied by the company's corporate tax rate for that year. Step 6, work out the offset differential. Work out the offset differential for each year, which is the difference between the company's original R&D tax offset entitlement and what the R&D tax offset entitlement would have been if the notional R&D expenditure claimed had been reduced by the clawback adjustment amount. Step 7, work out the amount included in assessable income at Part B, Item 9. Work out the amount you include in your assessable income applying this formula. Offset differentials minus deduction amounts divided by the company's corporate tax rate for the period. The total clawback additional assessable income amount is also disclosed within the company tax return in the other assessable income section. The effect of this additional assessable income is then to reduce the incentive or premium component of the R&D tax offset that relates to the underlying clawback events so as to reduce the company's permanent benefit from the R&D tax incentive for clawback amounts. That concludes our presentation on the new R&D tax incentive clawback adjustment mechanisms. Please see the ATO or Swanson Reed website for additional information, or alternatively, contact our office if you have any questions. Thank you.